Okay, very good. Let's just give everyone a few minutes to get settled in from the waiting room to the webinars. We're so happy to welcome you all again. And hello of everyone. Welcome to the next Private Equity Insights webinar. I'm pleased to welcome the community once again for yet another of our successful webinars where we welcome top industry professionals to discuss what it takes to fundraise, invest, operate, and exit in private equity. I'm happy to once again have hundreds of GPs, LPs, C-suites, board professionals, and a lot of other investment professionals tune in, whether it's early in the morning in the US, as it is for Neil joining us today, or for Hoda joining us from Singapore, for example, where it is rather late now. Here in London is a great weather, especially for a webinar. The webinar today is centered around some of the opportunities that are emerging for private equity in healthcare, looking at the different segments PE plays and the implications and opportunities for each area. The webinar today is powered by Syneos Health, who are thought leaders when it comes to this exact topic. If you aren't already familiar with Syneos Health, they're a global healthcare company that provides exceptional advice to the investment community, and I'm sure you'll get to know them a little bit better as we go through today. Now, that was a little bit about Syneos Health, and good that you were able to join us now, Mark. Without a little bit of technical issues, we wouldn't have some fun at least. So I'd first like to Mark Benatar. He's a partner at Apex Partner. Mark joined Apex in 2019 with the healthcare sector team, and before that, he worked for 10 years in business development at General Electric, essentially in the GE healthcare division. Mark, it's good to have you on board.
Great, thanks for having me.
Of course, very good. Now he's joined by Hoda Abu Jamra, the founding partner of TVM Healthcare, tuning in from Singapore today, a global healthcare investor, very active and with a focus on the emerging markets. So Hoda, it's really good to invite you on here as well.
Thank you very much for inviting me.
Very good. Now, finally, we have Neil Patel of Syneos Health, who will also be moderating the discussion today. Neil is a senior managing director with Syneos Health Consulting, and he leads the portfolio strategy and transactions vertical. Neil, are you excited for today?
Very much so.
That's good. Now, before we begin and before I hand it over to Neil, I want to tell everyone, and of course, remember that there's a Q&A section where you can ask a lot of questions for the panelists today, and they will need to answer it either as we go or towards the end. And that's really what can make a really fun and energetic session here. Now, be sure to ask any question you might have to these three people, and Neil will pick them up as we go. You can also go and upvote some of the other questions if you're having trouble coming up with your own. So go and type them in already if you already have some prepared. During the webinar, we'll launch 2 polls, which Neil will guide you through. So without further ado, I don't want to take more of your time. So Neil, please go ahead and introduce some of the contents for today.
Wonderful. Hi, everyone. Looking forward to this discussion. While we were preparing for this discussion with the panelists, we talked a little bit about the dynamic environment as it's related to COVID-19, and even just as recently as the recent data that was released for the vaccines from Pfizer as well as from Moderna, which it's some of the themes that we'll be talking about are going to be quite changing because of the promise of some of those vaccines, and so we'll want to talk through that dynamic environment. And in that dynamic environment, there's also opportunities for investments and for investors to generate opportunities, and we'll spend a fair amount of time talking about that in this sort of current era, but also how is it likely to change even over the long term, given some of the significant changes that this past year is likely to create, as I said, over the long run. So I'm very excited about the topic today and engaging in the discussion with the panelists. As a reminder, there's a Q&A section. I think most of you have. I'll be monitoring some of the questions, and from time to time, looking over there to perhaps interject into our discussion. So as we go through, please think through some questions, and we'll make sure to address some of those. So with that, we'd like to jump to the first question and start at the high level. So at a macro level, Mark, Hoda, what has been the impact of COVID-19 for your funds? Also, with regards to the availability of assets and investment opportunities, and finally, how and what changes have you seen with regards to exits?
Thank you, Neil, for the question. Mark, do you want to start or should I?
Go ahead.
Okay. Neil, as a healthcare private equity investor, I think we're lucky that this pandemic that was very harsh on everyone, including us, did not hit us as much as other verticals. So I would say our fund did okay. Some companies suffered from supply chain, availability, but it's only, a little bit inconvenience, but the business, was needed. It's a medical device company. Our home care business did better and did well, as you can imagine. Our long-term care company that does rehab also did better and partner with the government to take out and relieve hospital from non-COVID patients. So our IVF company, which is more consumer business, suffered a little bit. So it's a balance between the different portfolios. But I think we took our precautions very early on. And I really think that when you have good companies and well managed and you take you put systems in place, it makes you more resilient. So for us, that was very helpful. Also, speaking of availability of asset and exit, I mean, we're going through an exit now of one of our portfolio, and as long as the investors see that there's a long-term value, we're hopefully going to have a very good exit by end of the year. So this it's kind of a positive thing. For availability of asset, I think there's a lot of interesting asset, and our fund invests mainly in healthcare services. So we don't invest in general acute hospitals. Our investment strategy is specialty care, ambulatory care, and manufacturing. So with COVID, we're seeing the silver lining is that we're able to continue this investment strategy, but also government in our market, which mainly is emerging market, are realizing that they have to fast track regulatory systems. So I think for availability of asset and the future portfolio, I hope will benefit from some silver lining of this negative pandemic.
Oh, wonderful.
Yeah. So yeah, maybe a quick view on our situation, and I'm sorry if the line is not great because I keep getting those messages. But basically, I mean, I think we've been lucky so far. It's funny when we wrote this question initially, we thought that we were past sort of COVID and reflecting on it, and now I don't think we can talk about it in the past yet. Will we ever? I truly hope so, but then there might be another wave of something else. So I think that so far so good. We invest a lot in technology. We have a few businesses in software, in telecoms. Obviously, those businesses performed really well. We have a few businesses in healthcare as well, which are businesses that are in elective surgery, specifically orthopedics, and these businesses were impacted. But because during the first lockdown, basically the view was that we had to sort of create capacity in the hospitals and stopped those businesses basically from one day to the other. So there was a big impact, but short in time, and then the recovery was pretty quick. And you see, with the hindsight, that different businesses, of course, are impacted differently, and you started to see those that are not impacted, those that are accelerated, those that have a one-off impact with a catch-up effect, those that are impacted for and lose some business forever. So I think it was very insightful, and so after the first lockdown, most of our businesses recovered very well. We have a business in the hospitality space, which was lucky enough to have the sort of the holiday season, summer season, just in between two lockdowns, and so which was a very good thing. So all in all, I think we're happy. We're lucky and very happy with the portfolio performance. But it's true that going forward, people think differently, and if you start looking at the assets and the exit opportunities, we're going forward with a number of exits. We're active with a number of acquisition opportunities. So those businesses that have basically passed the lockdown test positively, it's almost a stress test, a real life stress test on the business model and its ability to survive this type of crisis. So those that survive and thrive basically through the crisis, I think have seen some sort of an increased value and increased attention. And so these are these businesses that sort of come on the market more than anything else. So a lot of very interesting assets.
And in discussions perhaps with GPs, and have you thought, or have you had discussions with regards to just the fundraising environment? I would imagine that in the run up towards the end of 2019, you look at healthcare focused funds, or just fundraising in general, but in particular healthcare focused funds seem to have increased significantly. Have you had more recent discussions with GPs, and do you expect the environment to continue to be one in which significant capital will flow?
Yes, maybe Yoda, I can start on this one. Yes, we do, and again, very interesting to have been through this second sort of semi-lockdown or pseudo-lockdown. But in the first one, I think that GPs, where we had a long-term relationship with, we're really happy because we are in a fundraising phase, and so it was very easy remotely to engage with them and to sort of confirm them back into the new fund. But the new relationships, obviously, these people, wanted to see us face to face and wanted to maybe postpone the discussion to after the lockdown, and then those discussions took place and went well. But then now we're in the second lockdown. We see less of these attitudes. People say, well, let's get used to it. And even the new LPs are basically digitizing their diligence process, their review processes, and so this seems to be, getting in some sort of a norm after a second experience like this.
Yeah.
And the same applies to what we do. We sold a business where 100% of the interactions with the buyers were done remotely, virtually, without the people meeting face to face. And now we're active on several situations where we see the same thing. People have adjusted to that, and they got used to this type of interaction.
Yes, Mark. I mean, I agree with Mark, and I hope it's true because it's efficient. We just have to get used to it. The same thing for us investing in an asset when we never seen the management team or we've never visited the clinic. It's not an easy one, but I think everybody's getting used to it, and we're able to count. I mean, we're lucky we have advisors in all the countries where we want to invest, so we can send them to look at the asset. But I think I'm noticing that interaction on video are becoming the norm and acceptable. And surprisingly enough, I don't know what LPs think when they do diligence on us, but when we're looking at an asset, I'm noticing that we can get much closer to the management team on video, because a lot of time you can interact on one-on-one with different people separately. When you go to visit them, you go and visit the management team, and everybody behaves and everybody sits in one room and take you to dinner, and the interaction are very structured and choreographed. Now that you take your time because of the situation, you have so many one-on-one interaction, and now that you interact with people in their homes, you talk about their personal life. It's interesting that sometimes you bond, sometimes you find things about how they think, how they work with each other, what do they think informally. So for us, I'm trying to explain to our team that there is positive thing of that, even if we don't go and see them all the time physically, as long as you make an effort to connect and interact on videos as much as possible and as much as need, we may be able to get that that comfort feeling. I don't know what LPs think when they commit for us, but I hope it's the same. We'll let you know in a year. But yeah, I guess everybody's trying to get adjust and adapt. And you know what? It's better for the environment. Less flight, less travel. It saves budget. So there's a lot of positive as much as as negative in this list.
Yeah, Hoda, you bring up a great point with regards to, certainly, I mean, we've seen, when we're performing those on behalf of an investor or whatnot, certain costs have gone down, right? Because we're not, no one is traveling and whatnot. The interesting point around, like, this technology has actually enabled a more personal connection where it wouldn't have existed otherwise. I didn't really think about it, but you're right. You are enabled access at a higher clip to management, just because they'll have more availability. It's not just all concentrated in that 1 week when you have to be there, in person. Take calls at, or as an executive, you can take calls at kind of odd times and fill up your calendar that way and extend your ability to reach into the management. So I did ask the poll, the next question around, do you expect a price or multiple correction as a result of COVID-19 amongst the assets that you're looking at? And interesting, the poll results are nearly half and half. So 56% yes and 44% say no. So it'd be interesting to get feedback from the two of you, Mark and Hoda, with regards to the price and multiple corrections associated with COVID-19.
Yeah, maybe the sort of the answer reflect the fact that the crisis has probably created some sort of a polarization where those assets that have passed the crisis, positively, let's say, have kept their value and sometimes even gained relative value, and some of those that were sort of surfing on a trend that has changed are sort of suffering. And so on average, it's probably it's difficult to give an average, but you see a little bit of everything when you check. I mean, one way to look at it is also to look at the trading comparable, and that's interesting because when you see, for example, either the S&P or the MSCI in Europe, you see that I mean there was a first big drop, of around 30% between the end of February or mid-February and the end of March, which is when valuation were at the bottom, and then you saw a gradual recovery up to now. If you look at healthcare specifically, and you look at the S&P healthcare index, we're up 8% versus February, and we went at some point down almost 30%. So I think this is one answer. The healthcare indexes, whether you look at the S&P healthcare services, the S&P equipment, the Nasdaq with the technology element, the Nasdaq healthcare, it's even stronger. I think it's up around 16% or so, 17% of the last analysis that I done. So multiples are up on some healthcare segments, on most of the healthcare segments. Now there is also the positive effect of the US elections, but you could see that on healthcare the recovery was much quicker and bigger. And this is also of those assets that are coming on the market, which is by definition a selection, we see that the valuations are holding pretty well for those that went through the crisis successfully.
Yeah, I agree with Mark. Just to add something more specific on Southeast Asia, an emerging market, we're also growth capital investors. So we look at smaller assets. And for us, we see that this created, especially in Asia, the valuation were very, very high because there was not a lot of healthcare assets even before COVID. Now, people are not deploying that much money even in healthcare, or if they do, they are looking at bigger assets or things that are stable and they are comfortable and feel safe to buy. But our segment of growth capital, first of all, we see correction where the valuation are not as crazy as they used to be. But at the same time, again, valuation is always an art, correct? And we look at the long-term growth trajectory in the business that we look at. But if the company needs cash, so if you're looking at small companies that need cash and you have a place to kind of a little bit get a better valuation and do a better deal. But in general, health, as Mark said, healthcare asset valuation kind of especially an asset that survived and did okay and was able to be resilient in the last year. We see it there. I mean, again, I see it in our exit. We were very worried that our exit will be impacted, but because our asset doing so well before and during, actually our exit did not get impacted at all. I mean, it's not closed yet, but we're very happy with it, and we did not get any negative effect.
Yeah, you bring up an interesting point with regards to the public markets. This week has been probably a very, very good week, right? All the vaccine news, and Mark, you'd say that as you said, that perhaps the halo effect from the U.S. elections, the removing some uncertainty, creating a pretty robust environment. I'll say for my own portfolio, it's been happy to see, and hopefully it continues as we move forward. So the next question around is now we want to speak a little bit more about some specific themes within healthcare, right? So, what are some of the key themes that you're noticing as a result of COVID-19, and where are there perhaps opportunities, and what areas within healthcare perhaps you might want to shy away from in the short to medium term as the dust settles?
Well, obviously, healthcare is, as you know, is very broad. Some of it is consumer-like. Some of it is less. Some of it is very infrastructure type of businesses. But basically, what we see is that there is a strong focus, at least for us, on two elements. One is digital, and so any sort of model that is digitalizing itself or has the capacity to add a digital element to its delivery capability is a strong focus for us. And then it's really the theme of essential. Is it essential? Is it part of those activities that can be stopped or will be stopped or will be reduced significantly because of the crisis that is starting to emerge, the consumer crisis. We are focusing on very sort of essential services or products, and sort of getting a bit more prudent on very sort of either even elective, but also consumer type of businesses that depend on that are nice to have products that depend on the overall consumer markets in the different markets we're in. So we're really focusing on essential stuff.
Yes, for us, Neil, it's interesting. I mean, we're specialists in healthcare, and our strategy has been all along, especially emerging market, is to kind of, create the same dynamic that then you have in more mature market where things are outside of the hospital, where you have more specialty care, where you have more ambulatory care, so care outside of the hospital. And this is what we've done, and this is what we see that we will be doing more of, is specialty care, ortho, diabetes, IVF, home care, ambulatory care, and a little bit, as Mark said, more digital health. Now, we're not a tech investor, so digital health for us falls under a VC technology investment, but it's becoming such an important aspect of healthcare that you cannot ignore it anymore. So we are, thinking as a theme, should we add it as a theme on its own, or should we look at it more as a complement to all our portfolio companies? But one thing we know it's happening now and we're doing is that we're insisting on a lot of existing portfolio and future investment to have this discussion on digital transformation. So all the companies cannot say, oh, in the future, I will do this. Oh, in year 3 or year 4, I'll add digital transformation. I'll add telehealth. I will add electronic medical record. It's becoming a must. I don't know. I mean, it's maybe bad to say what I'm going to say, but the healthcare industry is dinosaurs, usually in adopting technology. They are innovative. There's so much innovation. They're all scientists, but I was always puzzled. Why wouldn't they adopt technology? I mean, people are talking about telemedicine. Telemedicine exists for 15 years. We've been looking and seeing at, companies of telemedicine for 15 years. So it's not a new thing, but finally people are forced to use it. Finally, doctors are forced to use it. Finally, insurance are forced to reimburse it. Electronic medical record system in the West, we take it for granted. In emerging market, I mean, it's a plus. It's like a luxury. People don't use electronic medical record system. They still use paper. So now when it shows how resilient they are. So when they have to close doors and go and treat their patients remotely, they're like, whoa, what do we do? Where do we get the medical record? How do we manage our business? So for us, digital health and digital transformation is the biggest theme that COVID forced happily on the healthcare industry. I just hope people don't go back to what they did before fast. I hope they are forced and the system finds a way to force them to stay on course, because it's needed. It's needed. The other themes that also are becoming also in healthcare is AI and the use of AI and how it's used. So this is another theme that will also start taking more importance, because people are using telemedicine, so you're collecting more data, and people are more sophisticated in how to collect that data. So hopefully that will help even, diagnostic and everything to really progress and help medicine in general. And this is on top of, vaccines and also investment in infectious disease, because as you know, you're a pharma expert, infectious disease was not a fashion in the old days. This is a theme that becoming now, everybody is, every biotech company that can turn their company and talk about COVID, boom, the company changed from something and into infectious disease. So there's a lot of themes that came up. In summary, I just hope, like I said, that digital health and the digital transformation will stay on, even if at some point people go back to normal, which, I don't consider there's post-COVID. I say we will live with COVID. So yeah, I hope some of these themes kind of like help us to go to the next level in healthcare.
I completely agree with regards to the point around data. It's always left me confused as to how protectionist we are with regards to data. I mean, when you think about sort of financial information and actual capital, right? I have apps that I can share spend money freely all over the world, and that level of comfort with the data we don't see in healthcare as we see in, say, financial services or other industries. And it just always was interesting. And I understand that the sensitivity around the data, but thematically, this sort of healthcare being behind in terms of other industries has been something that's been discussed for the 20 years that I've been following healthcare. Right, we've always been behind, and I think we continue to be. Perhaps the gap is shrinking. So as you say, hopefully that this change does sort of continue to stick to, because I think it is so much value when that data is kind of more freely available. And of course, you have to be careful given the sensitive topic.
Also using remote treatment. I mean, I don't see why do I have to drive to go to the hospital, sit in the waiting room just to talk to a GP when I can get on video. I have some diagnostic tools that I have at home, and then he can give me and let me know, do I need to go or not? Another example that we talked offline with Mark about mental health. I mean, do you imagine the compliance for mental health if it's on video? Because people don't have to make the effort to get out of their home if they are depressed and go and miss all the appointments. And so there's a lot of the things that we're doing now because of COVID, using technology, that we should, from a patient-centric perspective, that should stay there and should not change. So we need to think more patient-centric and not doctor-centric. The doctor sits and people come to him, and this is the way he wants it, and this is how it should be. And so if we start thinking more and more what is best for the patient, we do a lot of home service. I mean, I'll give an example. GE used to have home diagnostic kits, and then when I asked last year, and they disconnected them because nobody bought those. They were too expensive for people to buy. I'm sure now GE thinking to redo this, and other medical device manufacturers. So if you have some of these diagnostic tools, for example, IVF patients, they go 14 times to the clinic. If you have these tools at home, you go once to the clinic instead of 14 times. A woman that is busy doesn't need to go 14 times to the clinic, because this is the way it's been done for 40 years. So, one of the themes that I hope we keep also is to always think what's patient-centric care need to stay and have everything, technology and the healthcare providers tune into that and keep that going.
Excellent.
Sorry.
Just a reminder for the audience, we will take questions, and there's a question that came up here, Hoda, that for you, I thought, given the earlier part of the discussion, I want to bring it up. So you mentioned that some of your companies are going through an exit now, and the point around this question is, the recovery has just begun in many parts of the world. Why exit now, and what exactly you would let us know? I guess it's the question of why exit now as opposed to a year from now, after maybe letting the recovery set in. And it's a question for you, Hoda, but Mark, please think through it and answer as well with regards to if you are contemplating an exit with any of your portfolio companies.
Yeah, so for us, we're a private equity fund. We have a life to the fund, and we have to raise another fund. So a lot of companies that are doing well will say, why are we selling them? I mean, we sold the company in 2005. A year after, it doubled its EBITDA. And we're sitting there saying, oh, but we didn't have a choice. We have to exit. This is what we promise our LPs, and this is what we have to do. So that fund and that portfolio is coming to that stage. But if the company was not performing well, we may have asked for an exception and kept going and waited for another year. But again, we're very lucky. This company has been doing well and did very well during COVID. Actually did much better, and that positive impact is lasting, is going to stay. It's not something that will happen only this year, and one can see when they analyze it. So it's the right time for us, and we're happy to do that. But if there's another portfolio where we needed to wait another year, we would have waited, because yes, hopefully in a year or two things will recover. I think a year is maybe too soon for some businesses, but yeah, if I answered the question.
Yeah, and speaking about Apex, I mean, we've sold a couple of businesses over the past 2 months or so, and there is also, I mean, at the end of the day, we're supporting a leadership team deliver a specific value creation plan that we all agreed and elaborated together. And once this plan is delivered, I think it's fair to if the business performed, if the next stage of the development is ready to be delivered, then the management team also wants to sort of exit and go with the next owner. I think we all have a plan, a business plan, a strategic plan to deliver. Once it's delivered and you feel that the business is there and strong, and again the market supports the right valuation, then we need to. It's a good thing to exit. To just we can't really stop the life of a business because we feel worried. Of course, if there is an objective reason to delay the exit, then we would do that because we want to maximize the potential. But if you check over the past 2 months, we've exited 2 businesses just because they needed to get on with their lives, if you will, and we had delivered our part of the story, and it was ready for the next owner.
Got it. Okay. So going back to the themes and subsegments. I mean, we may have talked a bit about this, but specifically around sort of distressed opportunities. Are there subsegments within healthcare that are likely to generate these opportunities, and which are likely to remain more resilient?
Maybe if I start, we've seen that during the first lockdown, a lot of activities were just shut down, by the authorities, and so and some others considered as essential could keep going. And for example, patient will need to continue to go through their cancer treatment because you don't stop that. But replacing a hip or a knee, you could delay it by a few weeks or even a few months. And then all the aesthetic surgery or the sort of nice to have type of interventions were in many cases cancelled. And so we see this sort of these shades of gray between what is absolutely essential and what is a nice to have. And we tend to really focus, and in terms of those segments that are likely to remain very resilient, these are those segments, the segments that are essential. So we focus on that. And also, we've seen a lot of element of weaknesses within our different healthcare systems around the world. Triage system, access to care, availability of tests, and so there are now businesses that can help the different healthcare systems prepare for the next potential crisis. And I think that people were sort of seeing their healthcare infrastructure almost as a as a cost. Now it's almost become sort of a core national infrastructure, and so you need to invest into it. You need to change it to get it ready for the next crisis to come. And any sort of those businesses that basically improve access, improve agility, are thriving. And so these are those businesses that we're looking at. So those improving the system, the agility and the access to care, and those that are focusing on essential element of the care pathway.
Yes, I agree with what you said, Mark. Elective surgery, elective clinics are a little bit, struggling, but again, you also realize that if you build companies that are sustainable, and it's funny to bring that now, but everybody talks about ESG and impact, but we really realize when you put good governance in companies and you're there hands-on, and you build them in a way where they can saving for rainy days, even when they are distressed, they can survive it. Why? Because you are very hands-on and you put plans and you really, put systems and create a sustainable business. And I think this period emphasized more the importance of all these talks about ESG and governance and sustainability and impact, because now you look at them as a de-risking, not only nice to have and good to be and to have, especially in our emerging market. So it, it's the one that are likely to remain resilient. I think even the one in healthcare, even the one that may have been distressed, they are learning to manage to be resilient if something else happened, by planning, by putting systems in place. And we as an investor also, it shows us that, we're happy. We've been doing ESG, we've been doing all these systems and sustainability for a while in our businesses, and we see the exit, the good exit that creates. But now in time of crisis, we see the resilience that it builds in companies that should be distressed. So we're very happy, and it kind of like gives us also a plan for the next, to really, when we invest in companies, we really need to think, what do you do if something happened? We put plans, when you think about the 100 days or the 5 years business plan, when you invest in a portfolio, in an asset, in a company, now you think about things that you insist on things that it was nice to have, but now it's like from day one you have to have. And again, I insist again about digital transformation, because as good as the company is, if you don't have systems that it allows you to survive, and electronic medical record system, and a way to be able to adjust to whatever hits you, it's difficult to survive. So we're learning a lot how to also build much more resilient companies, and sustainable, with what's going on.
Maybe one point to add, Neil, is the fact that there is going to be a crisis, or there is a beginning of a crisis ahead of us, and so businesses will be put under a lot of pressure, and so we feel that it's probably the guys with the biggest market shares that are going to be surviving the most. It's going to be for them also a consolidation opportunity. We think from a sort of a sub-segment, or what do we focus on? We will probably focus more on those players with the highest market share in their own market or segments, rather than going with the smaller players.
Excellent. Okay. Along this line, we'd like to talk a little bit around how do you as a fund are planning to capitalize on these trends, and how is this environment impacting your future investment decisions around capital allocations for your portfolio? Has it caused you to rethink perhaps these subsegments within healthcare, or where we're going to focus a bit more, or is it just more you've laid out the plan that was in 2019, and now it's just going to continue to execute towards those investment decisions?
Yeah, Neil, I think I answered this question in my earlier in advance. Sorry. So yeah, it does. We're not changing, because we invest in everything outside of the hospital, in the ecosystem around the hospital and emerging market. So it's still the same. We're not changing that, but it's impacting the future decision and the way we look at portfolio, by making sure stress testing the resilience early on, and also hoping and making sure that they do have some kind of digital transformation plan, digital health plan, partnership, or plan themselves, because sometimes it's difficult. It's a big investment to do technology, but there's certain things they have to do as by the company, as I said, like EMR, or ability to do telemedicine, and the ability to have everything, the records, the medical records on not, you know, the old-fashioned way like it is here where we are, but also to be able to partner with all these, you know, with some of these digital platforms to also create a you know, a different business plan and a bigger or sorry to say that, stronger resilience in the future, and to be able to compete. And also, I mean, let's not forget, when you can do that, you can also provide cares to more people in emerging markets, and hopefully at a cost that is cheaper. So in the market that I'm talking about, Malaysia, Vietnam, Indonesia, Thailand, you know, you have all these rural areas that are very difficult to reach. And for us as an investor, we want to address this, but it's very difficult to build things and to have assets. But the way things are moving, hopefully we'll be able to reach more people at better price and to the system, and for us also generate very good return. So, you know, it is a great time to be in healthcare and to be in the market where we are, because a lot of them also will leapfrog some of the Western market, because as you can imagine, you know, the systems that have certain ways and certain machine and certain infrastructure and capex, it's very difficult sometimes to be lean and change it. So the market where we are very exciting, because they can leapfrog a lot, and using all this technology and digital transformation and digital health.
Yeah.
And Mark, what about? Sorry, go ahead.
No, I said I would. Sorry if you had another question, but I would definitely agree with what I said. You know, there was a big wake-up call in most of our healthcare systems, and we've seen a number of things that don't work well enough. And so, you know, those businesses that are capable of just improving the healthcare systems are those that we are looking for. And you know, and what do we do differently? I think that as Oda said, you know, technology and digital transformation is just, you know, at the heart of you know, every business strategy now. And so we need also to be able to understand those trends, help those businesses you know, understand how to accelerate from that front. And so we are you know, we are definitely focusing on those elements to be able to be credible when we talk to business leaders, and also you know, very creative when we think about the value creation opportunities.
Okay, wonderful. Now let's talk a little bit about the future, right? So you know, we've talked a lot about the current environment, but you know, when do you expect to return to normal run rate for your portfolio companies? You know, I've opened up the poll, and I'll share as it comes in. You know, the answer to this question we were saying earlier, right? But you know, 2 or 3 weeks ago, probably would be substantively different than today, given some of the news that had come out with regard to the vaccines, et cetera. But you know, what are your thoughts around the sort of normal run rate for your portfolio companies, and you know, what are the drivers and the barriers that might, you know, bring that timeline in or out? In terms of the polls, we've got 61% of the audience says 12 months, 26 6 to 12 months, and 5 and 5 from the 0 to 3 months, and 3 to 6 months. So certainly skewed towards the long run, despite the recent news on the vaccine. So very interested to hear both of your perspectives with regards to this.
Yeah, nobody knows really what is the normal going to be going forward, but definitely, you know, just when you talk to colleagues, you see that some firms are sort of keeping the home office sort of policy until June. sometimes. And so, just the mere fact that people or some people will be working from home is going to change the market. Footfall in pharmacies, people going for non-essential treatments into hospitals, to see doctors, primary care doctors or specialist doctors, is going to change, and is not going to go back to normal until or at least to a new normal until, I guess, probably after the summer at least. So very difficult, of course. Nobody has a crystal ball, but it seems like there is at least some residual attitudes that have been put in place that are not going to be, or behaviors that have been put in place that are not going to change before next summer.
Yeah, I agree with Mark, and like, again, I would say some of those behavior, I hope they stay, because some of them are good. Having flexible working from home and having telemedicine and all that, some of it, I like it to become the new normal. But having life going back to being safe is what's important, because I don't know what's normal. I mean, it will be the new normal. It will be like the flu, and will go on. Now, yes, it's great news among all this, not great news. The good news is the vaccine news. But as you know, you still need to test it. You still need to find a way to ship it. You still need to find a way how everybody can get it. I mean, let's think about the first one, the one from Pfizer, that need to be, frozen at a temperature that, some people cannot even afford to have a refrigerator. They're going to be able to afford to have that, special freezer. So it will be a little while before this gets to reality, but it's great news. It gives us hope. We're human being. We need hope. We need to feel that everything's okay. And this is for us good news, because, as you know, vaccine takes forever and ever. So the fact that we have 2 of them is a miracle that fast. But again, I don't expect that, and I don't mean to be negative, but I don't expect things to be safe before a year plus. Now, to answer specifically this question, I think I personally, and for our fund, I answered it already. Most of our portfolio, because we're in healthcare, it's just building resilience in some of the portfolio, but its business should go back to normal, or is kind of happening. I mean, surprisingly enough, even the elective surgery, as soon as there's no lockdown, there are, waiting lists and people waiting. I mean, I call for certain things that are non-essential, and like, oh, you need to wait 4 weeks. I'm like, what do you mean? I thought nobody's going out. It's like, no, we're booked. So as soon as there's a small opening, people are out doing, especially healthcare, because they have time also, and because they are flexible. And so people are using healthcare, even the elective one, as soon as they can. Now, economically, I'm wondering things that are like plastic surgery and a little bit interesting things that are nice to have. I'm not sure the impact of those, but these are minority in healthcare. But in general, I think it's not, it's not that impacted.
Yeah, in fairness, right, the poll, we had multiple choice, but one of the choices was not never, right? So one of the things that it's probably, the truth is the fact that, what is normal is it is, the impact of all of this is going to have lasting impact to a lot of what we do, behave, and how we invest, et cetera, and it's probably never going to return to a normal. It'll just be shifted over. I'm gonna.
I mean, people are still dying from the flu, correct? Sorry. I mean, people are still. Correct. You still have a lot of death from the flu, but we got used to it, and we didn't call it pandemic at this point. But when you look at the numbers, it's huge. So COVID will be here to stay with us, and we will live with it and find a way to be protected as much as we can. And also another thing, the habits that we're taking now, hopefully they will stay with us, because I mean, if you see in Asia, when people have a flu in Asia, they respect other and they wear masks. And you know, I remember sometime when we see people doing this, we used to laugh. Oh my God, look, they're having a mask in the metro. You know, yes, because they have a flu. So there's certain habit that we were forced to take with COVID. I hope it will stay with us, and it will kind of help us to protect ourselves and respect other people, not only because of COVID, but because of flu or any other thing going forward.
Well, it'll be interesting, right? It'll be. I always think about like, well, will we ever return to the world where we're shaking hands, or for the Europeans, you know, kissing each other on the cheek when you greet each other and touch and hugs and touch.
The French kiss you 4 times, not only 2.
I think we have. Well, actually, we've got 5 more minutes. I think we'll probably need to wrap this up. And I'm gonna probably ask one more question back to the audience as a sort of conclusion. It's sort of around, you know, what is your thoughts around the frothiness of valuations, as is especially related to healthcare? The question is, it seems like it's very inflated, and would you see this as a short-term trend? Or new normal, and would you say it's the right time to enter the space as a LP or an investor? So thoughts on that, sir. We had talked about earlier the valuations and it being, you know, the observation from this participant feels like it may be frothy. Maybe you say no, it's the correct valuation and therefore not frothy. And the second question, associated question is, you know, is it a good time to be entering as a LP or investor in the space?
Yeah, so again, very difficult. I mean, good question, but a difficult one to answer because, you know, nobody has a crystal ball. But I would say that you know, and this is the reality. You need to, if you need to invest your money, you look at the assets available. I think that there are very few assets that are as interesting as private equity right now. And so going into that space, you know, is of increasing interest. You see that in terms of the allocation of the different LPs. But you know, healthcare has a nice runway. If you pick the right segment of healthcare, you see a lot of things that the healthcare system needs to just improve its efficiency. People have recognized that having a national healthcare infrastructure is very important. It's probably as important as it was to invest into defense, you know, and it's just not cost that you need to cope with and try to reduce as much as possible. There is a value in having a strong healthcare system able to react to those crises where, you know, the world is globalizing itself. We're not going to be able to isolate one country from what's happening in the rest of the world. So people, I think, will prioritize healthcare increasingly. Governments from you know, in terms of fixing what didn't go well, specifically access to healthcare, agility to react to this type of pandemics, and so it creates a great runway and a great market opportunity, and you know, a need which is not well addressed, and so if you have money to investing into that space is absolutely the right thing to do. There is a nice story to tell for some businesses.
Yes, thank you, Mark. I think Mark answered the question. I would kind of say the same. The one thing I would add also for emerging market, healthcare in emerging market, it's really the right time to, because it's very underserved in healthcare. Government and payers finally are realizing, as Mark said, it's a national it's a national security importance. I mean, you need to be independent in healthcare when the borders is closed. And a lot of those countries count on medical tourism to go there to do this and to go there to do this. So they are realizing that they need to put systems, they need to help the infrastructure, they need to support the healthcare system. So I definitely think it's the right time to get into healthcare, and especially in emerging markets. And hopefully that will really make, again, leapfrog and create a good systems, independent, and that can serve everybody properly and with quality. And the same thing with reimbursement too in this market. Hopefully, not only the regulatory but the reimbursement system for this market will progress, because a lot of those countries don't have a lot of reimbursement in healthcare, and it's not healthy, because if one person is not good, the whole community around them gets sick. So they are realizing that even the government, that they need to put some healthcare reimbursement, healthcare coverage. So things will change very quickly and very fast, and there's a lot of opportunity for so many people. I mean, when people said, who's your competition in the market, I said, we need 10 years and 20 extra people doing what we're doing to have competition, because there's so much to do.
Well, Mark, Hoda, thank you very much. It was a very engaging dialogue. And Johan, I'm going to hand it over to you for any conclusions.
Sure. What do you think? Do you think the future looks bright?
Say again, sorry?
No. Well, let's skip to that. I think we've already done an hour here. So what a great discussion it has been. I hope everyone of the world's leading private equity community learned a ton. Remember that you can always reach out to us, Syneos Health, or the other speakers if you want to know more. And stay tuned for the remaining of 2020 and 2021, where we at Private Equity Insights will be launching a ton of insightful content across our online platforms. All of this, of course, while we are eagerly waiting to get back to that conference space. But until that point, Neil, Hoda, and Mark, thank you so much for joining us today. Whether you're looking for insights, news, conferences,
thank you.
Find it. Have an awesome day, everyone, and stay safe.